Well, the Fed ruined our streak today, but not by much. Shockingly, Tesla was only down a little bit. So, as noted at the beginning of this week, the only big news that was really going to happen was the CPI, the PPI, and the Fed's decision regarding inflation and the economy. Well, those reports have all been published now, and the Fed has spoken, and the markets have gone, whatever. I'm going to review down below what Powell had to say, and I'll have some serious bones to pick with him because I didn't necessarily agree with everything he said. And then we'll talk about Tesla and how Tesla stock moved today and where Tesla might be going the rest of the week. Will we pick back up and continue to move towards 300 right away after this kind of non-event today, or will we continue to go sideways? Well, anyway, we'll talk about what I think is going to happen next. In the meantime, this is Randy Kirk. If you like this kind of content on Wednesday afternoon, where we do kind of a midweek review of all the financial aspects of the week, as well as the Tesla general news of the week, we do a review on Wednesdays, then hit the like button. And if you haven't subscribed yet, I suggest subscribing and hitting notify, because I've got the next report that I'll be coming up with tomorrow. This morning, you might have wanted to take a look at the one that I did on the Optimus, the what I see in terms of the next 7 years of Optimus sales and profits, and also what that means to the Tesla stock price. That one, it was posted just a little while ago, about 4 or 5 hours ago. You might want to take a look at that. And tomorrow morning, we'll be taking that look on Tesla semi-trucks. You may know that Tesla semi-trucks now have been pushed back a little bit to the end of 2024 in terms of any serious production. So we'll talk about that and show you where Tesla semi-trucks might be headed over the next 7 years. Of course, Patreon, all of the charts that I'm creating will be up on Patreon, as well as I'm going to be putting up my notes each day of what I talk about on these shows. Well, okay. So the Dow was initially, the Dow actually was relatively unhappy with the Fed decision altogether. But the NASDAQ and the S&P, they were kind of neutral. And the Dow went down and then just kind of stayed down and came back a little. But NASDAQ and S&P went down and then popped right back up. NASDAQ ended up for the day. Well, my personal take is that the market agrees with me. There will not be any more Fed increases this year. And even if they do 50 more basis points, oh well, business will keep going along just fine. Businesses and even people, just you and me, we get used to these interest rates really quickly. And I think we've gotten used to what are kind of normal interest rates. These are not crazy high interest rates. So because we're kind of used to them, if you raise another 25 basis points or another 50 basis points, it's not going to cripple the economy. It's not even going to probably impact the decision to buy a new Tesla very much, because it's not going to change that monthly price very much if we go up another 25 or 50. So I think that's what the market was saying today is whatever. If you think that you need to raise 25 to 50 more basis points this year, fine. However, we think that you're basically not going to, that all of your fuss and conversation when Powell was talking about, we voted and we'll vote again, and the next one's going to be an open meeting. Everybody can watch what we talk about during the meeting, and we don't know what we're going to do next time, but this was not a skip. This is not a skip, and this was not a pause. It's going to be dependent upon the numbers between now and then, and all of that was just cover because inflation's coming down. Anyway, he said that no one predicted the labor market continuing to be this strong for so long. And he's right. I think nobody did. I certainly didn't. And I've been shocked. Each month we see that unemployment is still doing fine, that we have the lowest, record low unemployment. We continue to send more and more people into the workforce. And you've heard me say these words a million times if you follow the channel. We still have nine jobs openings for every one person looking for a job. I will tell you, at least anecdotally, the companies are not as desperate for labor as they were a year ago. A year ago, it was crazy. You would just hire anybody that could, stand up and show up. That is changing. People have figured out ways to deal with their current labor numbers, but I think there's a lot of job openings out there because people want to be looking at resumes, and some people even call them phantom job openings, where they're not really planning to fill them right now, and they just have the resumes coming in. This could change easily. I mean, if business picks up a little bit, you could go back to those days of a year ago when people were literally, I saw a sign spinner outside of some retail stores, and he wasn't spinning the sign to get more people to come in and buy. He was spinning the sign to get people to come in and apply for work. And that was just in a retail environment, not like a large employer. So we'll see. If business picks up, we can start to see the employment picture tighten again. The Fed said that they think that the overall economy is only going to increase by 1% this year and 1.1% next year. Boy, that's hair splitting. I guess that's just, you take an average of everything and say, well, this guy said 3 and this guy says 0.9. I don't know. So that predicting something like that, I think Powell even mentioned something about you can't predict this stuff. So I think he's completely wrong. I think the economy will do much better than that. At this point, I think the bull market is telling us that we're going back into a good economy. And I think that's where we're headed. That's just me. We'll see what happens. Of course, Biden would like us to see much more than a 1% increase next year because he's going to be trying for re-election. But I don't think the economy is going to hurt his chances. I think Biden's problem is not going to be the economy. It's going to be his leftist progressive stands and his difficulty in speaking or even walking. And I know that sounds ageist, but I'm allowed because I'm old. So therefore, I'm allowed to be ageist. Powell says that what he wants to have happen, what all the guys on the board want to have happen is they want inflation to top out and head lower. And I just don't understand that at all. Of course, it's topped out and headed lower. A year ago, it was at 9%, and now it's at 4.5%, according to him. That sounds like it topped out at 9 and it's headed in half. So I can't understand what he even meant by that. So if you can understand that, put it in the comments below. I can't even figure out what the words meant. But what he did say was over the last few months, it's been kind of flattish around this 4.5%, 5% level. And that's on the core inflation number. Well, core inflation is one number to look at. Headline inflation is a number to look at. There's all these different numbers. I watch Trueflation. As you know, Trueflation says it's over. And I think that's what the market is trying to say. Inflation is done. You can talk about it, you can yap about it, but inflation is done. Powell went on to say about a couple of specifics. He said, look, housing, he says, it's a lagging indicator in terms of the CPI, and every indication is that rents are headed lower. They're, probably right now in the 0 to 2% range in terms of inflation, but it's not going to show up in numbers until next month or the following month. Well, when it does, that's going to really help the CPI, which means that that's going to be a good reason not to raise rates. And everything I'm seeing is saying that. I mentioned that this morning. So other categories, energy is down. Basic grocery is down. And when I say down, the inflation rate is lower by a lot than it was. You've got all the commodities going down. He never mentioned commodities once. All of the commodities. Okay, there's a couple of exceptions. Virtually all the commodities are down. They're deflating. They're not even disinflating. They're deflating. They're less than they were a year ago. Oil is way down and headed down. It was down again today. So I don't know what, I can't figure out what Powell's talking about, but the market gets it. Well, okay, what about bonds? Well, bonds, 10-year bond came down today too. The bonds are they're continuing to be in this range. And the commentary today, the CPI and the PPI today, none of it did anything to change this range that the bonds have been in. In fact, if anything, the 10-year was headed down. I'm sorry, not the bonds, but the interest rate on the bonds, the yield was headed down. So why then was he signaling more increases? Well, he says it's still at 4% and it's not coming down fast enough. So he wants to have that availability to have these increases. But here's one of the funny parts. every question but one that was asked today during the question and answer session, they were always asking him, well, why aren't you making it tighter? Why aren't you continuing to raise? Why wouldn't you raise now and stop raising later? Why aren't you doing it faster? Why aren't you doing it more? Prove to us that this was a good idea to pause. And I thought to myself, do any of these people do analysis? Do any of them look at Trueflation? I mean, it's a really important website now. Do any of them listen to Zillow or to Redfin in terms of the numbers they're getting on rents? I mean, what analysis are they doing? Are they paying any attention to the commodities prices going down, that the bond prices are staying even? Are they paying any attention? So one guy asked that question, and finally he said, look, it looks to me like maybe you should be really pausing and saying, this looks like it's going to be a multi-month pause. And Powell says, nope, it's we're at 4%, 4.5%, and that's not coming down fast enough. So we think overall, we think there's going to be 2 more raises this year. Well, anyway, I can't figure it out. I can't figure out why all these reporters, these financial reporters, seem to be happier. It would have been thrilled if we were raising the interest rates even faster. If you understand that, would you put it in the comments below? I have no idea what that was. Powell also responded to questions about the regional bank pressures and the commercial real estate markets. He said, yeah, we're watching those really, really carefully. The commercial real estate issue is real. It's an office space issue only. He didn't say that. I'm telling you, it has nothing to do with manufacturing space. It has nothing to do with large commercial like tilt-ups, for doing distribution centers and whatnot. It has nothing to do with small little retail stores and with little tiny business locations. It has to do with office space only, but it is big, and it's a big issue. But he also said it's spread over a lot of banks, and it's spread over a lot of regions, and it'll be spread over time. So he doesn't really expect a serious problem from this issue, and therefore doesn't expect these banks to be in trouble either. Okay, overall, you probably can tell, I think inflation is over. I think the market thinks inflation is over. I don't think there'll be any more Fed increases. I think that in July rather, they will not increase, and then they skip a month in September, they won't increase. But I also don't think there'll be any decreases either, because I don't see deflation hitting that fast. Some do. Kathy Wood, she thinks deflation will happen quickly, and the Fed will be lowering rates later. Powell says, look, if it happens, I'm going to lower rates, but I don't expect that this year. Maybe next year, probably next year, but not this year. All right, let's switch to Tesla. So Tesla wasn't able to hit the 14 days. Oh, well, but they only missed by like $2, a little bit, just slightly down in the after hours that I checked just before I started doing this program. And I think that, went down a little bit more than that when the Fed announced, and then it bounced back, kind of like the NASDAQ. I would expect to see Tesla mirroring the NASDAQ for a bit. For the last 3 or 4 weeks, Tesla has been on its own. It hasn't been mirroring the Dow, the NASDAQ, or what I call what do I call them after all? The risky growth stocks. It hasn't been mirroring those either for a long time. It was mirroring those risky growth stocks. Well, Tesla has broken away, because why? Tesla is a unique company. There is no other company like it. Not for breadth, not for potential future profits, not for growth in sales, not for growth in profits. There's nobody like Tesla. Across the board, there's nobody that even compares to the opportunity with Tesla, as well as the zero risk, because they have billions in the bank, more billions coming, every quarter this year, and they've got no debt. So I think that they from time to time, they will detach like they did the last 3 weeks, and they will sprint up. I don't see that happening in the next few days or weeks. I think they'll kind of mirror the NASDAQ for a bit. Generally speaking, I would say flat to sideways, little up, little down, little up, little down. No more of these streaks. The next big news is not until like July 2nd, when they'll give the numbers for the second quarter. I'm still saying that number comes in around 490, but my confidence is dropping a little bit. might be closer to 460. I reserve the right to change my mind over the next week or so as we get closer. But I'd still like to see 490, and I still think it's possible. Other Tesla news, Elon is going to meet with Macron, the president Macron. I'm saying it wrong and I can't say it right now. It'll be his third meeting in this year. I am not a fan of the French Giga idea. I don't think it's a good idea. Tell me in the comments below what you think. Do you think it's good for idea for Tesla to go towards France for the next Gigafactory? I can think of a lot better places. I'm not for this idea. Anyway, but he's meeting with him. We'll see what happens out of that. Other news that's related is that the expansion of the Las Vegas Loop was approved today by the Las Vegas City Planning Commission. That's very good news for the Boring Company and very good news for Tesla. Keep in mind that it's Tesla automobiles running around that loop, and this will dramatically increase the number of Tesla automobiles that'll be down there, people riding in a Tesla for the first time, and eventually they will be the first product probably completely automated with no driver, and this will give millions of people in the Las Vegas Boring Company loop an opportunity to ride in a regulated space in an automated Tesla. So I think that'll be a good thing. The other thing, there's a narrative now. This is an interesting narrative. There's a narrative building around the idea that the Inflation Reduction Act, the IRA, will hurt the transition to BEVs in the United States. BYD 2 days ago and Kia yesterday or today both stated that they cannot export their affordable BEV vehicles to the United States because the $7,500 doesn't apply to their cars, and therefore they can't be competitive. I see this as a minor, though not insignificant problem, and I don't actually know what the solution is, but I do know it's going to help Tesla when the Gen 3 vehicles start hitting the streets. On the other side of the coin, Kia and BYD, San Francisco just hit 50% sales of electric vehicles. Now that counts the hybrid vehicles, but they hit 50% of all cars sold in San Francisco last month were electric. And there's a bunch of cities now in the United States, Portland, Seattle, Los Angeles, etc., that are over 30% in electric sales. California was at 17 last I checked, and they might be over 20% now. So this is an interesting thing. It's happening even without an affordable vehicle because Americans can afford apparently about $700 a month on their payments. And that's an average. That doesn't mean everybody can. So that is the report today from Powell. Tomorrow morning, first thing in the morning, you may have already know about this. I'm doing a brand new show every single morning. Monday through Friday, I'm doing a opening bell program where I give you all the news that you need to know early in the day when it's useful. Okay. I don't know if you're day trading, maybe you're not. Maybe you just like to watch it. Maybe it's just fun to see what's going on out there. And I go to about 20 different resources, pulling all the news, all the financial information, all the indexes that have reported that day, major companies that have reported that day, all this different stuff. And I pull together the news that's important, the financial information that's important, and I give it to you just like I do this on Wednesday night. And you get it at about 7 o'clock in the morning. That's my goal. This morning, all the uploading was taking forever, so it was about 10 past 7 when it got out. But my goal is going to be to start producing it at about 10 minutes into the market so that I can see where the market's starting to head that day, take a look at Tesla, take a look at the overall market, take a look at bonds, take a look at oil, see how things are trending, and then start actually doing the videoing at about 6:40 California time. I'm sorry, should mention that. California time, about 6:40. That'll give me time to hopefully get it up and running at about 7, but it might end up being a couple of minutes past. If you want to hear that every day and you want to be reminded, well, that's why you want to hit the notify button, but you have to subscribe before you can hit notify. And so you can also like this if you like the Wednesday night show. And then, the Patreon, let me mention it again, every chart that I make, every one of these projections that I do, the spreadsheets, all of those go up on Patreon as quickly as I make them. And I'm also going to start putting some of my notes that I do for each of these shows each day. I'm going to put the notes up there in case sometimes you miss one and you just want to go quickly read through it, kind of scan through it. That'll be up on Patreon. And right now, you save $7. I mean, sorry, you save for free. You can watch. You can do Patreon for 7 days as a test with no charge, and then decide whether or not you want to keep doing it. Thank you to all the folks that have been signing up. Had a lot of signups in the last week, and I appreciate every one of you. All right, so it's been great talking to you today, and see you next time.